Alright, are we live? Okay, okay. So you can see this over here. So on this inverse fair value gap, because we have a bunch of confluences for market maker sell models over here. So I'm expecting price to take out this low. And with the type of displacement that we're seeing here, I'm expecting price to take out this sell-side liquidity draw over here, all the way down towards this. So it's like a 1 to 2 type ratio over here. So this is the swing high, which is targeted as the stop loss, and then we're going to retrace towards the swing low over here. Okay, so I would honestly target this as my target TP, but yeah, seems like it's a pretty good trade. It's a 1.81 ratio, so it's almost a 1 to 2, so that's okay. So I should stick to getting 1.5 to 1.5 to 2 type trades, honestly, because the 1.5 to 2 is more likely than a 1.15 to 1 to 2 type ratios. So I want to start off with 1 to 2 ratios first, and then move on to bigger things, you know. So basically, in other words, you can see that this is retracing lower, and it's going to retrace ideally towards the swing low, all the way towards the swing low, but I would target this as my TP because it's always gonna, you know, price is gonna just start becoming a little annoying at this range right here. So what I'm expecting it to do over here is to take out this buy side liquidity again, and then retrace even lower, because as we know that the New York session closes in an hour and 45 minutes. So I just want to sit out today and see how things play out in front of my eyes, and then just try to get an example for myself. You can see there's an accumulation, so accumulation, manipulation, and we have a distribution leg right here. So I just noticed that even on like the higher time frames, you can see accumulation, manipulation, we have a distribution leg right here, distributing to what? The nearest sell side liquidity draw. So it's pretty cool when you see a bunch of confluences happening with one another, but as you can see, it's drawing, there's a bunch of bearish displacement from the sell side liquidity first draw, so that's why I would let this TP run towards the next draw on liquidity. So I was low-key kind of expecting it to sort of, so technically you could go up with the buy, but honestly I would like to be on the sell side of the curve. So I think today I'm not going to take the trade, but tomorrow for sure I will take the trade. I know it sounds a little like I'm saying, oh, not it's like the never ending tomorrow, right? But now I will take the real trade. So you gotta realize I started panic because like I actually like got into the market for like 10 seconds, and I was like, bro, I was panicking, bro. Like I lost like 90 cents, but like because I accidentally clicked sell, right? So yeah, I started panic a little bit, but you gotta realize this is real money at this point. So I was like, holy shit, you know what I mean? But I gotta escape that mentality, you know. It's all about losses and wins, right? Because trading is not just about like, oh, hey, you know, it's only about wins and stuff. In this type of scenario, like you see how there's like bullish displacement right here. Once it reaches my SSL draw, let's say there's a lot of bearish displacement right here, I would let my TP run towards here. But then when I see a retracement or a pullback towards this side, ideally a market structure shift on the 5 minute, I would cancel my order and then just like, you know, let go of my order, because I don't want to like risk too much as well, because there's so much to greed, right? So yeah, of course if you can make like an extra buck or two, that's all right, but like if you drag it a lot, then it becomes a little bit of a problem, and then everything just sort of crashes on your head in a way. So see, this is the SSL draw, and you see we can use this as a retracement from TP. So yeah, let's see how this plays out. I'm anticipating, so you see there was a minor market structure shift on the 1 minute, so we seem to go back. So you see this was the TP. So yeah, let's see, we're seeing a bit of a reaction. Honestly, I would just cancel it at this point, like over here, right here. Once it retraces a little slightly above, I would just cancel it, because this is indicating a potential market structure shift. This is probably the 5 minute swing high. So if this breaks this, see, if this breaks this, then I'm confirming that this is a market structure shift. I'm not trying to be on the seller's side. Make sure all my orders are also, yeah, there's no orders. Okay, cool. I'm so sad that we lost a little bit of money, but we gotta also like escape that mentality. I'm just kidding. I'm not really sad about losing $90 because I lost like $100 to crypto, bro. See, this is the problem with like run-on liquidity, is because if you let if I saw a lot of bearish displacement, but the moment it goes on reversal, I just gotta get out. So if there's clear displacement below a TP, that's okay. It's okay to let your TP run a bit, but ideally once you see a 5-minute reversal MSS with real displacement, you get out. Alright, simple as that. Because you need to see, you see over here, there was a lot of displacement on the 1 minute frame. See, we had a market structure shift on the 1 minute frame. The swing high was broken. This was an internal term high. So I'm not trying to like risk anything else. See, because in a reversal type situation, you need to always, like in this type of situation, you should always look for a 1 minute market structure shift. Because in displacement scenarios, like especially when you're letting your TP run a bit, like see, I'm on the 1 minute time frame. Like if you go lower than this, it's just, you're just dragging it, bro. Like you don't really need to do all that. But 1 minute is like the best case scenario to sort of see where the market structure shift really happens. See, as you see over here, this is the swing high. It broke this with heavy bullish displacement, ultimately indicating a reversal. Or even if it doesn't indicate a reversal exactly, that's the point where you should cut your losses. So see, this was a swing high. This is a major swing high. So this is already in what do you call that thing? Already in a trade in itself. So at this point you would have lost money if you waited for this swing high to be broken. I don't think anyone's that dumb. I'm stupid, but I'm not that dumb. Who am I kidding? I'm actually stupid, but I'm not that stupid, you know what I mean? But yeah, ideally you would cut your losses right here when you see the market structure shift on the 1 minute. See, whether it is a reversal, a sign of reversal, or whether it is a fake out, it still doesn't matter. You just get out as soon as you see this market structure shift, because it's not worth it. Because you're gonna lose more money when it goes towards this, because you don't know if it's gonna reversal again. You're gonna pray that it's gonna do this, right? But then it doesn't really do this. Or if it just keeps going higher and higher and higher like this, then you're just losing money. You know what I mean? So that's for the greed, basically. That's the greed. That's the greed that's speaking right now. Ideally, when you're starting to, like, when you're at the first stage of trading, you shouldn't like go for this. That's what I learned from a lot of people, like this run on liquidities. I was trying to get this sell side liquidity draw, but nah, you cut your losses right here. I mean, you cut your trades right here. Otherwise, it's a loss. So I'm trying to wait for this to be hit right here, this sell side liquidity draw. So let's wait for it to be hit. I'm not too sure how long it will take, but I think we should be fine, honestly. Let me see if I can order flow. So if you see order flow right here, this is bullish order flow. Let me look at order flow right here. Just swing, basically. We have a fair value gap. This is a low probability reversal. A low probability reversal in this scenario. So see, there's order flow right here. Low probability, very low probability. Fair value gap needs to be significant and like big. That's when it's high probability. Remember type 1 and type 2? If anyone was in the stream last night, you can see that this is a high time frame PD array, so that's why it trades against or towards. So you see, this is the bullish order block on the, let me see over here. So this is a bearish order block over here, and we have a bullish order block right here. So it's either gonna come down towards this, or it's gonna go away from this. This is the supply, this is the demand right here. So we see a lot of displacement. It's cool. It's pretty cool. Accumulation, manipulation, distribution. Amazing. Accumulation, manipulation, and we have distribution, like fire. This is actually pretty fire. because you see this happen over and over again in the market, and that's basically where you sort of find your way, I guess. Nami, Inami, Inami, Inami. I'm not trying to take this trade though. This is just a retracement towards the upside. I don't know where this goes or what it does. So overall, I'm trying to be on the seller side because this is a market maker seller model in the global grand scheme of things. See, it's a seller model over here. It's a seller model over here. This is just a temporary buy model. This is a seller model right here. So of course it's going to be a seller model in here, like a minor little, I mean, market maker buy model right here, and it's going to displace what towards sell right here. So I'm not trying to be on the buyer side, and the overall grand scheme of things is you know, towards the sell side. So let's see. Seems to be reacting at the 4-hour fair value gap. This is the 4-hour fair value gap. If I zoom in, as you can see, this is a 4-hour fair value gap. So I'm not trying to see no reaction right here. Seems to be using this as a support level to retrace towards the buy side liquidity draw. But ideally what I'm expecting to do here is to use this inverse fair value gap to retrace either to this sell side liquidity draw, because this seems to be like a what do you call those things? Seems to be like a rejection zone at this point. Like price is refusing to go lower than this, which kind of does make sense, but at the same time it doesn't. So I want to like compare with price as well. See, it will go to like a low of like 17k right here. So I'm pretty sure they're trying to like bring it down as much as possible, so that way sellers can, I mean the buyers can buy it like a good price and drive the economy upwards. So right now they're mainly focused on bringing the market down. Again, liquidity, concept of liquidity. They're trying to add as much money, take out as much money possibly from the market, and then use that as a way to sort of boost the economy, I guess. Because you gotta realize once stocks drive down to 17k right here, where that's the bigger sell side liquidity draw, you gotta realize they're gonna start buying back up, because that's like such a discount price, you know. And like of course if I got like the stocks at like a 17k price, I would buy back at this point right here and then push the market upwards, because you gotta see like the rest of it's just a bunch of consolidate, I mean it's a bunch of bullish legs over here, so it's not really a market maker buy model, but this is where the origin starts. So it's going to retrace down towards this, which is exactly coincidentally aligning with the 17k range right here. So they're going to start buying back once it reaches this, maybe bring the price a little bit lower, you know, collect a bit of liquidity, and then retrace higher towards the buy side liquidity TP. That's on the like grand scheme of things though. See, over the next few weeks, that's what I'm pretty sure for like the next 3 weeks ish, they're just gonna keep doing this. They're just gonna keep going lower. You know what I mean? So I'm expecting it's a 15-minute fair value gap. No, this is just sweeping liquidity. No, I'm not trying to take this. I want to wait for this to be taking out the highs and then go lower, you know. Yeah, so it is what it is. Let's see, let's wait for it. Let's wait for it, and then let's wait for a proper formation in the market, so that way I can actually properly take a trade. In the meantime, let's learn. Let's learn from the GOAT himself, Susie.
Bullish mitigation block, which is this right here, captured. We're now going to take a look at a few opportunities within the markets based on everything that I thought so far. I believe that you need to understand theory, but you also need to see the theory being put in practice, because that right there shows to you that the theory works, repeats, and that you're able to see these algorithmic signatures inside of the markets.
Okay, so this is the execution, isn't it? What time frame is he on? What's with this audio? What's going on with his audio? Yeah, so this is like a market maker buy model right here. Goes up towards this swing high, then it retraces from that. It's pretty cool. Uses this fair value gap as a reaction, retraces higher. See, he has experience. He has experience. This kid's like my age and he still has way more experience than me. Damn. Look at that. He's using this fair value gap as support. It's gonna retrace. It's gonna retrace higher. Watch. See? TP. Market maker buy model right here. See? So yeah. I mean, ideally this would be my TP. This would be just a sweep. What do we see here? Market maker sell model. Okay. And we have a overall market maker sell model as well. Sorry, market maker buy model right here. Swept liquidity goes lower towards what this. He's comparing SMT. Wait, I think he's comparing SMT between the same pair. Wait, SMT can apply for higher. What? Wait, yeah, SMT can apply for time frames too? Question mark. Because if you think about it, right? Yeah, exactly. So, for example, like let's say I'm looking at this in like the 5-minute frame, it's going to be bullish right now, right? But overall, everything is saying that we're going to be going bearish right here. So that's SMT in itself. It's not always even about plus cracking correlation between assets like NASDAQ and US 30 compared with NASDAQ, for example, between assets. But like you gotta also realize like this right here is an SMT, right? SMT. But then you also gotta realize that this is going on a bullish reversal, which means it's an indication that this is invalid and it's gonna go on a bearish reversal soon. See, there's a fair value gap reaction over here. Insane Fortnite reaction. Oh my god, Freddy Fazbear got clipped in 4K. Jesus Christ. Alright, whatever. As long as we have a 0.5 reaction right here, let's see what sort of insane 0.5 reaction we see here. Okay, so it seems to be reacting from equilibrium right here. So today I'm not trying to take the trade. I want to see everything in hindsight and then just apply tomorrow. That's exactly what I want to do. So, okay.
Liquidity. If we then drop into the 1-minute time frame, we can see the following. We can see that from the 9:30 opening, the market reprices towards the downside. We manipulate lower.
This is the market maker buy model right here. This is a manipulation, accumulation, manipulation, distribution, major distribution. Even on the first swing high itself, it hit TP. So ideally, you would have hit TP right here. When you see this fair value gap, internal fair value gap, you use this, a little bit of a retracement from this area, and it pulls back to this area on the lower time frames and then goes higher and higher and hits TP. Bar bim bar boom. Easy. Okay. But right now I'm not trying to take no trade because it took out this high. Okay. It could take out this low, but I want to see everything happen in hindsight today. I shouldn't like delay stuff too much either, but yeah, I'm expecting this low. This low was taken out, right? It swept liquidity, right? Accumulation, manipulation. What is it doing now? Distribution. See, like over here, if I had to draw, okay, that's gonna get really messy now. So accumulation, we have manipulation right here, and we have distribution. That's what I'm expecting it to do because this is a market maker buy model right here. So eventually, it's gonna use. It's seeing a little bit of a reaction, but it's going to use this as a support level and retrace towards the buy side liquidity anyway. And then it's going to retrace afterwards. I want to see a discount entry towards the sell side liquidity. That's what I want to do. I don't want to take a trade remember, on the bigger time frames we are bearish, so which means we need to be on the side of the sellers rather than the buyers, because if we are on the buyer's side, then we are basically just going to get drooled, like fucking drilled to that. I'm not even kidding. I just said drooled. That's fucking crazy, bro. Why am I tweaking like that? But yeah, we gotta make sure this is hitting TP real quick. But anyways, let me go back to this and let's see what's gonna happen here. So we have an inverse fair value gap. So you can see that this is using this as support right here, and it has a little bit of a reaction right here. Boom, comes back to this TP level, support turn, resistance turn support, and we go higher towards what? This TP right here. Boom.
It was obvious that we were now going to draw towards the buy side liquidity resting above this high. To my eye, this high right here was engineered buy side liquidity. We took out this buy side liquidity, as you can see here, and that completes the market maker buy model.
Right there. See? Exactly what I said. Exactly what I said. Exactly what I said right here. See? Inverse fair value gap. Inverse fair value gap. Taps into it. This is probably a premium entry because I'm assuming this is a 0.5 line right here. And then this is discount. So ideally I would get in here and then retrace towards what? BSL. Hits on the first high. See? This is just a sweep. In other words, it's a manipulation. And I'm expecting distribution. See? Distribution. Distributes to what? This swing low right here. The first swing. That's exactly why I want to target this. I don't want to target like the sweeps over here because I would consider this as manipulation. That's exactly why I select a little lower for my TP. See? Important stuff. But you also got to realize that smart money always tries to manipulate the market. So you also got to look at it from like a flexible third-person perspective than stick into one specific framework. You know what I mean? But hey, what do I know? Because I'm just a noob trader. You know what I mean? See market make a buy model right here. Not really market make a buy model, but it's a retracement. So you see accumulation, manipulation, and we have a distribution. So just a correction leg and then distribution right here. AMD power of 3 always happens like over and over in the market.
With a different perspective, I can anticipate where the
I gotta like study this off stream properly. Because on stream I'm not trying to like study, but yeah, I'm pretty sure it's gonna stick towards, with the type of displacement that I'm seeing here, I'm pretty sure it's gonna stick towards buy side liquidity and then retrace lower. Let's see. SMT can apply for time frames too, correlation between assets. So it's bullish right now, but overall whatever, bearish. See? Everything's bearish, but then if we go to US 30, we're bearish here too. See? Even though this is bullish right now, takes out this high, boom. See? Took out this high. So now what are we gonna do now? Go lower. SMT. Sorry, VSO, draw. Right. Pretty simple stuff. Manipulation, we have accumulation. We're probably gonna see a manipulation and distribution lower to this. So once US 30 does a reversal, and NASDAQ also hits this, I might take a trade towards the sell side liquidity draw, which is this draw now. Because this is the first leg. And I want to take it towards this sell side liquidity. Which is, let me just say sell side liquidity draw real quick. There we go. Alright. So once this is done, we also have the market maker lectures right here. Gotta make sure this is on my second screen real quick. So dropshipping store. Oh man. I shouldn't have brought that on my screen. But anyways, I gotta properly digest this today itself. I might digest this right on stream.
Area of this curve.
I gotta digest this on my stream itself. Alright, give me a minute. I'm gonna go to the toilet, and again, these are market maker buy models. Over here, see?
This is
See? This is exactly what he's talking about. And if you look at this in a higher time frame, again, time is fractal, and you can see a smaller change in a higher time frame. You can catch that in a bigger retracement. So like if you think about it, right, this is nothing but if you look at the, for example, the 4 hour, this is nothing but a simple pullback. See, this was the market maker buy model right here. See, this area right here, if I had to highlight that, this is the market maker buy model. So what do? We took out this high, okay? So now we're using this inverse fair value gap. This is not really a fair value gap. Oh my god, I can't speak. But this is just a gap in price, a slight gap. That's not even really a gap. But yeah, we could use this as a retracement. So I'm expecting it to take this high out and then retrace lower. So that's what's happening in the high time frame. So this is an order block right here, on the 1 hour order block right here, and then we're retracing higher from it. I don't really like 1 hour, so I'm just gonna take that order block into accountability and then look at the rest. So it's gonna take this and then it's gonna reversal, because the SMT divergence with US 30 is indicating a bullish wave, but at the same time we're expecting a reversal right after it takes these highs. So I'm expecting to take out this high right here, this specific high, not these are sweeps in my opinion, and then maybe sweep a bit, just a manipulation leg, and then distribute lower towards these swings right here. So that's like a pretty good trade if I get going for a shot from like somewhere like here towards like here. making this my, see, it's like a 1 to 3 type ratio. And let's say if worst case scenario it comes down to like here, at least if I can get in like right here, then I have a 1 to 2 ratio on my hands. But I do need to get in like right here, ideally. But it's probably gonna sweep liquidity, so it's gonna go for these equal highs right here as well. So yeah, I have a good 1.93 ratio trade, and this is the sell side liquidity, so it seems to be rejecting this price. But this third wave, I feel like it might just retrace lower, but I feel like it might also take out this high first in order to retrace this low. But let's take it to the nearest draw. That's basically from here to here. It's like a easier trade, honestly. I don't want to like risk too much money either, because it's my first few trades, right? I don't want to like go too big and blow the whole account. So this is the swing high, and this is the swing low. All right, so I gotta ideally get in somewhere around here. This spot. This is exactly where I need to get in when the reversal comes in. So yeah, let's wait for this, and let's wait for the reversal to happen as well. So we see the, let me get this in my head first. So we have the market maker buy models. So we have the inception right here.
Smart money reversal takes place.
It's the inception.
Meaning
This is the manipulation leg.
the market was drawn towards sell side liquidity. Turns
Low high, low low, high high. We have a fair value gap right here. What is this? A bullish unicorn right here. And then we use that as a support level to retrace towards buy side liquidity.
buy side liquidity, where the market is now drawn towards all of the buy side liquidity
The
that
point
has
of
been engineered
interest.
above all the highs on this sell side of the curve.
Yes, sir.
This lasts until the market trades above these relative
I gotta
low
take a
highs,
piss.
where
Hold
buy
up.
side
Let
liquidity
me
is
pause
resting.
this real quick. Let's see how this plays out. Alright, so let's see. Let's go back.
This is our market maker buy model completed. If we then take a look at the market
Inception. Manipulation leg. Reversal.
maker sell model, it looks like the following. It's completely the opposite when it comes to the logic of the market maker buy model. What we can see in the market maker sell model first of all is that there's original consolidation down here.
I think this is the internal term low, and we have this confirming the market structure shift, which is then going to be grabbed back and then go down towards the original. So it's a high low, high high, low low, and we have a fair value gap here. Boom. So easy stuff.
What this consolidation is doing is the following.
But it's just, you gotta make sure it's not too complicated when you're like actually executing as well. But yeah.
It is engineering the idea of a
So I'm hungry, bro. My mom's not at home. Oh man, it's okay.
strong support zone, so to say, being in right here. The moment that the market expands away from that consolidation, retail money traders will look at that through the following lens. They will think that the market found strong support here, so they will try to buy the market with a stop loss below these lows right here. The market continues to expand higher, it delivers higher, it's drawn towards buy side liquidity, therefore this is called buy side of the curve. This buy side delivery takes place until the market reaches that point of interest, that POI. This is where our smart money reversal takes place. The moment that our smart money reversal is confirmed, we can anticipate the market to draw lower, drawing towards sell side liquidity that has been engineered below all of the lows on the left side of the curve, on the buy side of the curve.
Right. He's talking about this. All the sell side liquidity will be engineered within the buy side liquidity. See, these are all swing points. If you think about it, they're all parallel right here. See, all the sell side liquidity from this upside of the curve, the bullish part of the curve, all engineered back when you're going on the sell side of the curve. Damn, that really opens like another part of my brain, honestly. But you see, what is this? This is gonna be your original retracement. See, when you're going lower, this happens the other way around as well. Like flip this upside down, and you'll see the same thing happening on the market maker buy model, because there's just a sell model, you know. Sell side liquidity from the bullish leg will be engineered as buy side liquidity on the bearish leg. Alright, it's pretty simple stuff. It's such a simple concept. Damn, this actually does make sense. Jesus. Alright, so let me put that in my journal. My journal, man. Alright, let me put that real quick. There we go. There we go. Awesome. That's amazing. Amazing. Let's go, baby. Alright.
Curve. Now let's think for a moment about why it's called sell side of the curve. Because the market is drawn towards sell side liquidity, and sell side liquidity rests below all the lows. And the reason why it rests below all the lows is because in order to get out of a buy position, you need to sell, and therefore,
Right.
it's called sell side liquidity. The liquidity is on the sell side. Below each low, retail-minded traders will place their stop losses off their buy positions because they see this one higher and they think we're going to the moon, we're gonna fly higher. Everyone needs to buy this, else I'm missing out. So they place their stop losses below all of those lows, and
Exactly. The fear of missing out. The FOMO is. I gotta make that a note as well. FOMO is the key to failure. The fear of missing out.
basically we know that the
You gotta take a moment, analyze, and make the decision.
majority of those traders will be wrong and caught off guard, and therefore we can anticipate the market to roll over, drawing towards these relatively lows here. Please note that this explanation of market maker models is just to make sure that the foundation is straight. There's way more to market maker models that I will discuss during this lecture. However,
like internal term lows, for example, like bro, Zuzi is the goat, bro. Like on some real shit. Like if you look at this, for example, you see there's an internal term low right here, internal term high right here. If this properly breaks it, you see I'm not talking about like the sweep that's happening right here. If it properly breaks it with proper displacement to the upside, we can consider this a market structure shift. Why? This is an internal term high, and it's between what, two short-term highs. Same concept goes for lows. This is an internal term low. If it properly breaks the internal term low, that's a market structure shift, and it's between what, two short-term lows. 1, 2. See, confluences happens over and over again, and this is a market maker what, buy model right here. This comes to this area. So what is it gonna do? It's gonna retrace towards here. This is your market maker buy model right here, and then you're gonna use this as like a small box right here as a retracement, as a indicator where the market is gonna go. So you're gonna enter from this fair value gap, this low being your stop loss, and you're gonna retrace towards this market maker buy model. If we use this OTE on this, I've already used it, but you see it's in discount right here, and it's a bit of a reaction over here because it's what, equilibrium. It's right before equilibrium, so therefore it's in discount, this fair value gap. So even if you enter over here, you still get in at a pretty good, like you're getting in at equilibrium at that point, but you know, you're still fine to the most part. Because if your stop loss is somewhere down here, there's no way you're gonna get liquidated. But I'm not trying to take that because why? This sell model right here. This is just a temporary pullback, because if you think about it, unless it has like a proper reversal above this internal term high over here, right? Unless it does this and it has a proper reversal above this internal term high, I'm not talking about a liquidity sweep. I'm talking about a proper reversal with proper bullish displacement, at least up to like this. This is the market structure shift point, at least up to like here. And like if I can get like proper confirmation, that's when I would consider this a actual market structure shift. But until then, I'm just gonna assume that this is gonna go towards this draw on liquidity right here, because why? We're on the sell side of the curve. Simple as that. It's a little choppy over here, but you get the point.
This is all I wanted to share when it comes to the foundation of the market maker models. If you want to study more about market maker models before continuing with this lecture, I would highly advise you to check out my educational playlist on my public YouTube channel. Let us take a look at the quote that was shared during the podcast. Every retracement followed by an expansion is a lower time frame market maker model.
Exactly.
You might be wondering, what does that exactly mean? What does this look like? I understand that if you're completely new to trading and if you're completely new to ICT concepts in general, that such a quote can be rather confusing. You might not be
Gotta
able
watch this
to
again.
imagine it in your mind. And that's why I've decided to create some schematics to make it easier for you to visually understand it. Because if you understand there was a market maker model, and what do we know? When there's a market maker model present, there's an opportunity present. Here you can see the delivery that was showcased earlier during this lecture, during the introduction.
You see? And this. I understand this. But I gotta make sure I go through this slowly after stream as well. Just to make sure that I'm on the same page as what he's saying. So sessions wise, it's still New York, but I'm not trying to take a trade yet. Because London's over. New York PM session maybe. I don't know. New York PM session is from 2 p.m. New York time. So right now it's 10:20. And at 12 o'clock it's gonna be lunchtime for New York. That's around here. So maybe during the PM session I would take a trade towards the downside. Between 10 and 11 you can actually take a trade towards the upside. So that's from like the first fair value gap that you see from 10 and 11. But I won't really depend on that. 10, I don't really see a fair value gap in the first place. So like, technically I guess you could consider this as a fair value gap, and like yeah, that does work, but in terms of like risk to reward, that's like a tiny risk to reward. So you gotta also make sure the risk to reward is at least like 1 to 2, and overall we know it's a breaking structure towards the downside, and it's just like there's no clear indication of a market structure shift. So as long as we don't have that, we have a bunch of breaker structures towards the downside and just temporary correction moves right here. So what are we looking for? Downside movements, not upside movements. So I'm expecting it to take out this with the next run after it uses this liquidity to power it downwards. So retail of that's why I don't want to go for any like limit orders, you know,
It was in all of the candlesticks. Therefore, we need to
because
find
you
a way
never
to
know when smart money wants to be a little bitch.
objectify or analysis about the marketplace. And the way that we can do that in an easy manner is by referring to the highs and the lows that form during specific time windows. Because if the high, for example, gets taken out of, let's say, the 7 to 8:30 90-minute cycle during the second morning cycle, and we are anticipating lower prices for the day, we can anticipate a smart money reversal to occur above that 7 to 8:30 high. If we see those signs present.
Gotta refer to this time cycles again. Gotta copy this real quick.
That confirm to us that a smart money reversal is in, we can anticipate the market to draw towards the 7 to 8:30 low. This would of course be the same as if we would be looking at the markets during 1 to 2:30 p.m. and we were anticipating higher prices for the markets, and we would see the low of the lunch cycle of 11:30 to 1 p.m. get taken out. Signs of a smart money reversal become present. Now we can anticipate the market to draw higher towards the high of the lunch cycle. This is how we're objectifying our approach within the lower time frames throughout the sessions. First of all, we refer to the sessions liquidity, the previous sessions liquidity, but we can also refer to these 90-minute cycles as key highs and lows to look out for. If we would then take a look at the market maker buy model,
We have a high time for PD array, which is a point of interest. Low, high, low, low, high, high, bearish. You have manipulation like right here, causing the reversal. We also have a unicorn model right here. We have a breaker, and then we have a fair value gap. We tap into it and go higher. And we can see each of these are just engineered buy side liquidity, which can be used as points of interest. See, parallel. If you look at it parallelly.
model schematic again, but with some more lipstick. As you can see, I first of all annotated that the previous cycle low
This is an internal term high. So when this is broken, there's a market structure shift for sure. So it takes out this, takes out a bit of liquidity and then moves higher. So that's how the market works. If I can like take note of this. So this is the internal term high right here. ITH, in other words. Internal term high. Right? So with a low, a high, a low, low, a high, high. This is a high time frame PD array. Maybe this is the fair value gap. And then it goes higher. These are all what? Engineered buy side liquidity. Over here. Right there. Over here. Right there. Over here. Probably somewhere around here. So once it reversals, market maker bought MMBM market maker buy model. Cool. Amazing. Truly amazing, honestly. My computer's lagging. I don't know what's going on there. You see that? See? So this is the exact opposite. So this would be, I'll make that note as well. So buy side liquidity, and from the bearish leg will be engineered as sell side liquidity on the bullish leg. The exact opposite, because this is the market maker buy model, and that is the what? Market maker sell model. Inverse 180. Let's go. Textbook.
low was down here. The previous cycle high was the original consolidations high. The higher time frame order flow is bullish and we're anticipating higher prices. Then our new cycle opens up right here at this time. The market drops lower, taking out the previous cycle low, trading into a point of interest, and we begin to see the signs present that confirm to us that a smart money reversal is in. And you have heard me mention this a few times already now. Signs that confirm a smart money reversal is in. Well, let me explain a few signs that we can look for. First of all, we can be looking for SMT. We can be looking for a correcting correlation with highly correlated markets or highly inversely correlated markets. If that correcting correlation is taking place inside of our point of interest during the right time window, we can anticipate a smart money reversal to be in. When we then see this leg higher, trading away from this point of interest, displacing to the upside, and we see the falling occur, where we see the market structure shift pattern take place, where we see this high right here get displaced above with speed and velocity, we can look for an imbalance that formed inside of this leg higher, and that imbalance is an opportunity for us to potentially see a retracement in, followed by an expansion higher. What I want you to understand is the following. This high is so important because it formed inside of a CB on the left side of the curve, a bearish fair value gap. Inside of this leg lower, there was a bearish fair value gap. Market retraced into that of PXL to PXH, a move from the previous cycle low to the previous cycle high because we were anticipating higher prices to be next. If we then take a look at the market maker sell model with the same logic, we can see the following. First of all, we can see that an original consolidation took place right here. This is where our previous cycle low formed. The market ran up higher and then this key time came along. The market manipulated above the previous cycle high, which was resting around this price level right here, and it traded into a point of interest. We then see the market begin to displace to the downside, trading below this
manipulation leg. We have a bunch of distributions.
This low is
distribution leg, distribution leg, distribution leg. We have what? Accumulation leg, accumulation leg, accumulation leg, accumulation leg. High time frame PDRA, which is a point of interest, sign of reversal. Okay. Manipulation leg, cost us a what? Reversal. We have what? A bearish breaker block. We have inverse fair value gap. We tap into it. We retrace lower towards what? Sell side liquidity.
So important because it formed inside of a
this is actually fire.
BC right here on the left side of the curve, and this low set up the run higher into the previous cycle high, into our point of interest, where we're seeing those signs confirm to us that a smart money reversal is likely to take place. Market displays to the downside. This is our 2022 model short entry right here, where we see an imbalance form after we see displacement below this low. The market retrace.
Internal term low. It broke it. Market structure shift confirmed. So it takes out the last bit of liquidity that it can, and then takes out this fair value gap, and then goes in and inverse fair value gap.
Into that low, into that imbalance, into that BC right here, and it continues to the downside, drawing towards sell side liquidity. It's important to note this occurs when our high time frame order flow, our high time frame bias is bearish. If we then take a look at the last down close candle that formed before this final leg higher, we can annotate that as our bearish breaker. This bearish breaker is again very important, and it's a very important reference point to look out for when the market displaces below it within this structure, within this framework. This is where true support turns resistance works.
Amazing.
Support and resistance works, but only sometimes.
This is an internal term low.
Think about that for a second. You hear me as an ICD trader say, support and resistance works, but only sometimes. And the majority of the times where your support turns resistance ideas work is when this structure is in play and where you see an imbalance displace below the low. That's a gem for you to investigate.
What?
Traders say support and resistance works, but only sometimes. And the majority of the times where your support turns resistance ideas work is when this structure is in play and where you see an imbalance displace below the low. That's a gem for you to investigate. And are you also noticing then that if you understand how to apply this framework, how to look for these specific things, you can basically have one of the most simplistic entry patterns ever, and even one of the most simplistic understandings of algorithmic price delivery. And I know that right now, if you're completely new, this probably sounds like Spanish. You're hearing me speak and you're like, what is he talking about? All these words, all this terminology, what is this? Trust me, just submit the time. Give it some time to process. Think about what I'm saying and try to look for it in the charts. Don't trade it, just go into historical market data and look for the things that I'm sharing with you right now and see whether or not you're seeing them repeat. And if you are seeing them repeat, you are experiencing a light bulb moment. And it's one of the most beautiful experiences that you can have during this journey. So let us now take a look at the application of time and market maker models. I would never create a lecture on YouTube without being able to showcase that I'm able to apply what I'm teaching you live, inside of real market environments. The majority of educators nowadays online only do stuff in hindsight. They go out there and they go into barley play and they show, look, this is when it happens, this is where it worked, this is where this pattern, this theory was applicable. But you never see them do it live, you never see them call the right side of the chart, that place where it's empty, where there are no candlesticks. And you need to really think then, why aren't they doing that if they're sharing those theories with you? I think that's enough said. Let's begin with taking a look at real-time executions that I took, and I will walk you through the internal dialogue based on what I just shared with you. Let's begin. Alright, so here we are at the first execution that we're going to break down, utilizing the logic that I described to you so far during this lecture. What I'm going to do, first of all, I'm going to play back these videos, we're going to play back them in a speed that's rather slow. And before we begin this recording, let us first take a look at the following. What we're going to take a look at is how the market delivered thus far until this point. Don't just look at the entry, you need to look at how you wait for the market to trade into
I'll
your
watch the rest of
reverse
the
travel, which I will talk about in this
live
lecture.
application of theory afterwards.
Except this was
Say live executions right here. Live executions. Paste that. There we go.
I will tell you how to anticipate this reversal. You wait for confirmation of this reversal, and then you can just buy the buy
This is Inception right here.
side of the curve.
Inception.
That's simple, right?
Amazing. Literally. Amazing. On God. For real, for real. 100 emoji. On my mama soul. On my on bro. What am I saying?
Well, let's dive deeper into this market maker buy framework. Okay, so here is a schematical representation of the market maker buy frame.
Yes, sir. Yes, sir. Whole lot of gang shit. Oh my God, bro. God damn. Hold up. I gotta text my G. Hold up. I gotta text TZ real quick. Yo, where's TZ, bro? Where's TZ? Ethereum's down 5%. Jesus. It says 917k because it's in the global scheme of things. But in the smaller scale, it's a fucking small ass change. You know what I mean? Like, what am I saying? Hold the fuck up. I'll just be stroking my nutsack and I'm just by the fucking net. Okay, what the fuck? Sorry, tweak moment. My bad. You gotta do it sometimes. This guy has a fucking sticky note on his fucking steering wheel, but that's beyond me. I'm sorry, but you can be like ambitious, but like, come on now. Your fucking steering wheel, bro. I'm sorry. You can like customize your whole ass house with a bunch of sticky notes, but on your steering wheel, that's just extra, bro. I'm gonna keep you a stack. Like just the fucking just focus on the fucking road. Oh my god. Like why you on the fucking hold up. Let me check. This is some private shirts, private stuff. Customer. And where can it be? What the fuck? The recession is coming? What? Really? Oh yeah. Bro, our country's about to go into fucking oh hell nah, bro. Like this is about to be like the next wave of like losing money. Oh hell no. Jesus Christ, bro. That's about to be fucking crazy on God. That's about to be like bro, like this is gonna be like the round 2 of what we had. Chaos 2.0, bro. That's fucking crazy. I got lucky on trading and like make money through like the internet, bro. That's like the problem, right? A lot of layoffs and shit are gonna happen if you like depend on a company that's dependent on like the local trade. For example, like I don't know, this country, I wanna try and get out of here, bro. This fucking dog shitty ass country. I'm fucking, it's a disgrace to be born in a country with such a, I mean, even it's not really about the fucking like, you know, trade and shit. It's more of like, I mean, it's not about the country. It's about the fucking trade. Like I don't like want to be in a country where there's gonna be constant fear of fucking trade problems. Like, oh my god, my bad. I just turned off my monitor. I'm actually stupid. But yeah, like there's so many like apparently there's gonna be another recession in this fucking country. I mean, I wouldn't be surprised honestly, because we had like fucking multiple recessions at this point. But it is what it is, man. For these motherfucker time back, these motherfuckers stupid, these motherfucker bitches, these motherfucker lame as hell, man. Lame as hell. I'm just kidding. What the fuck am I saying? Oh, hell nah, bye. Bye, no way, bye. It's gonna be like second 2.0 of fucking recession. That's crazy. Oh hell no, bro. That's fucking wild. Okay.
Please do not feel like this is too much for you right now.
Alright.
Because I can understand that this might be shocking to you. All the annotations, your eyes are probably drawn to everything.
It's just a manipulation, like low, high, low, high, high. Bullish fair value gap, boom, retraces higher.
In here, but I will go through it with you. Just give me a few minutes, listen to me, and I will explain every single annotation here. So first of all, you have.
Matter of fact, I'm gonna end stream right now, and then I'm gonna stream later. Alright, because I gotta just digest it. I can't speak. I gotta digest this on my own. Alright, so I'm gonna head out for now, and I'm gonna come back maybe later. Alright then, see you guys. Thank you so much for anyone that tuned in, and I don't think anyone tuned in for the last 54 minutes, but it's all good.